In this, we explain how to get started on your investment journey and build your investment portfolio. First-time investors can choose between getting expert help from an advisor or wealth manager or opting for DIY investment. If you are DIY investing, it is best to start with just a few lower-risk funds to help build up your confidence. As you add more investments over time, these first funds will form the core of your portfolio. Morningstar analysts identify the funds which are suitable for a core holding within a portfolio as part of their research. These are generally broad-based and non-specific. Many investors start with a multi-asset fund. Depending on your appetite for risk, you can choose between one that has an equities exposure of less than 35%, between 20 and 60% equities exposure, or a 40 to 60 exposure to equities. Typically, the larger the equities allocation, the greater the risk. These funds can be more volatile, but also offer greater returns over the long term. Additional investments display your conviction in a particular asset or region. For example, you could add a global equity fund with low volatility, which balances the geographical exposure for you, or a flexible bond fund, which allows the fund manager a wide remit within the fixed income space. Once you have these core funds in place, over time you can add more specialist funds, such as a fund which invests in emerging markets or commodities. Individual equity and bond holdings are more risky, but help to personalize your portfolio to your needs. For example, if you have a high conviction about a certain company or wish to boost your income payments. It is important to utilize your ISA allowance when setting up your portfolio. You can do this using an online investment platform. ISAs are wrappers which allow investments to be made exempt from capital gains tax or income tax payments. Most assets can be shielded in an ISA wrapper, including cash in a savings account, stocks, bonds, open-end and closed-end funds, as well as life assurance policies and ETFs. It's time to get started.